How's everybody doing? Hope everybody's having a great weekend. Wanted to get on here, make a quick to medium long episode of what is quarterly theory and how do I implement it into my turtle soup. The motto you want to live by and die by with quarterly theory is when you implement the time, the manipulation becomes obvious. The first cycle is usually key for predicting and knowing when to trade. And right, if it's not obvious, simply just wait. It's the hardest thing for people to do sometimes is just not press a button and just not trade, right? Once you break that cycle of that psychologically weak moment of, oh, I need to, oh, it might go up, oh, it might go down, right? Once you break that and you can simply trade the price action and the time that's in front of you, right? Everything will make a lot more sense, right? Trade just the chart, not your P&L, right? We label our cycles XXMD, AMDX, XAMD, AAMD, right? And a very uncommon one is DMDX, all right? And if it's not obvious, don't trade it, right? Our labels are going to be for X, we have expansion, retracement. For M, it's going to be the manipulation. We trade this. A, so for A, we have accumulation. Do not trade this. D is going to be labeled as distribution. You want to trade this. All right, manipulation highs and lows are likely to form halfway through the M cycle, which is the manipulation cycle, and you can also read it in a lower time frame, quarter 2 or quarter 3 manipulation cycle, depending on what cycle you're in. Okay? In a scenario of super bullish order flow and we only get green candles and what you think is going to be a manipulation cycle, typically there's one large manipulation candle at the cycle close. Okay? And also, once again, if it's not obvious to you, just don't trade it. Just watch it. Okay? On your chart, for the 90-minute cycle, what we can do is look to 6 a.m. and 7:30, and then from there on, all our times and smaller time frame cycles become more obvious. All right? What we want to see is manipulation above or below the quarter 2 open, right? So as soon as we have our end of our Q1, which is, say for this example, accumulation, we want to go above the accumulation range, all right, and also above quarter 2 open to see our manipulation higher, and then distribute lower into the bottom of the range. All right, quarterly theory follows ICT concepts, but you don't need them when you just include the time. All right, and that's correct. You can simply just trade only time-based manipulation if you want to. All right, the low time frame cycles and the high time frame cycles makes it the most high probability, and that's what it should look like. All right, a couple other keynotes. Our breakaway gaps cause price not to need to always manipulate above an accumulation range, instead continue expanding. If manipulation is expected, but price continues, expect one large candle, retrace, then right back to continuation or accumulation. Like we said before, price isn't always obvious, but include obvious manipulation along with PDAs, order flow, your draw on liquidity, market maker models, and it's really hard to lose if you have good psychology and only take those good trades. A quick 90-minute cycle cheat sheet is quarter 1 accumulation consolidation, followed by quarter 2 manipulation, which can be seen as a Judas swing, and you want to be able to trade this. Quarter 3 is also distribution, right? And with the distribution, we take out the low resistance liquidity. You want to be able to trade this as well. All right. Say you're in a trade Q3 and your runners, you go into Q4, which can be a continuation or reversal, right? That's when you pull your stop to a good area and also just let the runner run if we have an expected expansion. All right. Another way that we can read this is quarter 1 continuation reversal of the previous quarter, right? Quarter 2 accumulation consolidation, quarter 3 manipulation, which also can be seen as a Judas swing, followed by a quarter 4 distribution, right, which takes out the low resistance liquidity. All right. Keynote, always keep in mind your market maker models, high time frame PDAs, as well as DOL. Everything can be mixed into a special high win rate, higher RR, all right, strategy with patience. All right. Only take the obvious manipulations, the high probability trades, and you can really find yourself in a position where you want to be. A good portion of this video will also show how you can simply just use quarterly theory, use time to scalp, and trade the high time frame. On your chart, this is what it's going to look like, right? For your first cycle, you have a 90-minute cycle, dumbed down to lower time frame cycles within the lower time frame cycles within the lower time frame cycles, right? With candles on the chart, you can see your first quarter, right? We don't usually trade the first quarter of the 90 cycle, right? Unless it's the second or third cycle and it's most obvious, right? Leading into our second high time frame cycle, we now have our session open, right? We accumulate, manipulate above the session open, right? Take out the accumulation range, all right? And what you can also do here is break it into an even lower time frame cycle. See that we manipulate in the second cycle and distribute to take out the low resistance liquidity in the third cycle, right? We don't have another high time frame PDA over here, so we don't see if this is higher time frame low resistance liquidity, but keeping in mind that it is, and keeping in mind of our power of three and just all of our many things that I could sit here and yap about included in the turtle soup, right? Just keep in mind every single thing, everything that you've written in your notes, just keep it all in mind, right? To see how we accumulate, manipulate into a higher time frame, manipulation down, which is this time frame cycle, manipulation down, right? Into, right, what you want to see is a distribution, but it's not the time to. So we distribute low time frame, take out some low resistance here, and start accumulating, right? Retracing, right? Into our accumulation, manipulation under this Q2 cycle, into a distribution in the third quarter of this third quarter right here. Q3 of Q3, and then Q2 of Q2 for the manipulation, right? Into our accumulation, whatever, fourth cycle, right? See here, you would have taken out your highs, so you can hold a runner, right? And maybe get stop break even here, or if you want to hold them all the way at break even, or get stopped in profit here. Then if you want to hold them all the way to break even, you can do that as well. Right, let's get into some higher time frame examples on the chart, so maybe you could help you see it better. So for this case study, we're using the week we just had, okay? We're on the weekly cycle here, labeled out from Sunday at 6 p.m. to Monday, 6 p.m. for our first daily cycle. You can see here on the bottom of the screen. Leading into Q2, we have Monday, which is, technically Tuesday because it's at 6 p.m. But at 12 a.m., midnight, we have our true open, right, of the week, true week open. And that's going to be something that you want to pay attention to for the weekly cycle, okay? Leading into Tuesday at 6 p.m., we end our Q2, leading into Q3 to Wednesday at 6 p.m., leading into the end of Q4, which ends our week out, right? So we zoom in just a little bit, and we're going to just show this on the hourly cycle, or on the hourly time frame, excuse me. So coming into Q1, right, we don't break any major highs or lows. So it's safe to say that most people could see this as accumulation. Leading into Q2, you would like to see a manipulation above the highs. But as you can see, we're already responding pretty bearishly. So there's no need to take out a high resistance high in order to respond lower. So we continue lower, have our open, continue to manipulate down, and have one candle. As you can see, the cycles are a little bit off here, but we have our one candle at the end, near the end of our cycle, which would be around here, which also seems to be around London open. Judas swing up into our breaker that we swing high, swing low, react off of, and then continue lower, right? And you see near the end of Q3, we distribute, right? And then expansion, lower our higher time frame daily cycle, continuing out our manipulation cycle, lower. So if you could only see like this, you would see that we've had Q1 accumulation, Q2 manipulation, and we ended coming into our accumulation for Q1. If you saw this just time based, you could say, oh, I'm gonna long. Just time based, right? Because Q3 we should distribute. Okay. So we have our lower time frame manipulation into a PDA to continue higher, right? And I don't want to dive deep into each day of the week, but you can see, accumulation, manipulation, distribution, continuation, right? Accumulation, low time frame manipulation, right? Here as well, manipulation up, manipulation down. Well, manipulation up, distribution down, but double manipulation down, up, down. Then distribute higher, take out this range high into the propulsion order block, right? Then to continue, lower time frame, Q2 manipulation, distribution, continuation, right, into a accumulation, um, manipulation up. Um, we have Q4 here, so it's not as obvious, right? So you can't say, we just manipulate up, then manipulate down. Your Q1s and Q4s are lower probability, and that's why we say to only trade Q2 and Q3 when it's an obvious accumulation, right? Manipulation into a PDA up, right? To continue higher, you would like us to see, lower prices, into London Open. So swing up, 3 a.m., continue higher. All right. So then we come into this week, which we'll zoom in a little bit closer here and get a better understanding of Wednesday to Thursday, or, end of the week. Here we have zoomed in Wednesday, 6 p.m. to Thursday, right? 6 p.m., which is going to be our Q4 cycle, which you can trade. You'll see here why it wasn't the best example because we're just ranging, right? And the Q2 and Q3 examples were better. But I wanted to trade it because we had news, so you know me, trading it, don't really care, right? Okay, so we have our Q1 at 6 p.m. accumulation with a Q2 open. We manipulate down below Q2 open and take out our accumulation low, range low to range high, turtle soup, high time frame PDA, right? Start to accumulate. In Asia, you can have a lot of dead cycles where, you just do this. But you see here as well, we react to the order block breaker we put in, wake up, sweep. Pretty sure we had a low time frame SMT here as well. And then I'm pretty sure I added like one con here, because I thought we would continue higher overnight. And I was looking at Wednesday and Thursday closely. So we'll go ahead and take this off the screen. Wow. Coming into the Q2 here, we have our Thursday open. This little small black candle right here. Mark out our lower time frame cycles. See that we somewhat accumulate, even though we take out this high, right? So we want to be careful and just pay attention to what the cycle does. We have another small accumulation to open up the smaller time frame cycle. We seem to manipulate lower, right? Don't take out any low, but go range high, range low. See within our two ranges right here, we have this first range, then another range. Take out range high, react to a bearish PD array, react to the order block with model number 1, continue lower, react again, take out the low, which then goes range low to range high. And notice what time we're in, the London, right? But then see we also are still within a super small accumulation range. So then Q3, we manipulate, distribute, and then with all in the same cycle, right? Go into our lower time frame cycle, accumulate, distribute, accumulate, manipulate, distribute. So you have to keep this all in mind the same way you would keep in mind how all candles are ranges and how all candles have their own power of 3, right? The same candle within the 5, 15, 1 hour, 4, 2, daily, All the same candles that you're looking at on each different time frame have their own power of 3. Each cycle has its own lower time frame, higher time frame cycle that it should align and correlate. Right? Accumulation, manipulation lower into an accumulation, manipulation higher, lower time frame, distribution down into, an accumulation, manipulation lower to end the quarter 2 of the daily cycle. End by reacting to the order block before open, right? Accumulation, manipulation, distribution within the smaller time frame ranges, right? Then we retrace, sweep this low, and then should, in my eyes, distribute within this third quarter. Go down to the 1 minute. We see that we accumulate, took out the range high, so we should take out the range low. Coming into Q2 here, what do we see? Range low. We're coming into open here. So, right, we got to look bigger time frame coming into a more volatile event. And that's just my bad for not paying attention to what exact time we're at. Right, I thought we were a little bit more pre-market. This was our our AM 8:30 news, 7:30 for me, where we generate liquidity, have relative equal news highs, and come into our lower time frame, quarter 2 manipulation cycle into a lower quarter 2 manipulation cycle after accumulating, right? But you say, oh, we're in Q3, we should distribute. It's not the time to distribute because we're in our lower time frame, Q2. What does this look like? You see these lows? We have a accumulation before market open within our pre-market range as well as our overnight range. Q2, we take out all of the liquidity below into a high time frame PDA. We soup. Wick down. Respond. Lower time frame CISD, and you can say we react bearishly, right, to this breaker, right? But we're not, okay? Because the higher time frame order flow is now souped into this 4-hour order block in our lower time frame Q2 into our lower time frame Q3 within this Q2. So what do you say we should do? We distribute, come into Q4, we can either have a reversal, right, retracement, or an expansion. Or kind of a small expansion into accumulation, right? Because of the accumulation, right? There's no need to retrace. We continue a little bit higher, right? And distribute because it's the start of the Q3 cycle. Some people can, read this as a low resistance liquidity accumulation, right? See what we do here. Get out our 2 cons because we took out the news high. We formed equal highs up here, so let's keep that in mind. Sweep, take out the highs, right? Close below the next candle. So if you're reading this on the daily chart, right? Close below. So we should have prices go lower, right? Coming into our Q1. Of our Q3, you would like to see a distribution, right? You would like to see a small time frame manipulation, right, below this accumulation, and then distribute higher. And see we make relative equal lows, stop below the order block, and continue higher to take it, right? But see also, within this Q2, and our higher time frame power of 3 at this 10 a.m. open, what do we not do? Oop. We do not manipulate lower in our higher time frame power of 3. So aligning all of it, not to where we have analysis paralysis, but where we just use our brain and look at the chart. Price is going to go lower now, and we're going to have to take out this low because within the 4-hour candle, we have not manipulated lower, right? With high news event drivers, such as, 10 a.m. news, that can cause us to continue higher. And right as we saw in the notes with some time-based liquidity, the DOL strong, we're just going to accelerate, right? But with no news at 10, we just had a pretty strong open to the downside, right? We reacted strongly. And also the SMT with ES, price is probably going to retrace here within our fourth quarter cycle, right? So we get in at the CISD, change in state, whatever, blah, 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 whatever you want to call it. Okay. Form a fair value gap, right? Within a fair value gap on the 1 minute. So this can be seen as a breakaway gap. If we don't wick into it and don't come back into our fair value gap or our order block for our model 1 entry, we're simply just gonna wait and just let this run to this low. No wick above. And it continues lower, right? And we can just buy back there because we're coming into Q4, Q1. So we're probably going to accumulate. Let's see what we do. We continue, right? But we got out. This is the next low that I probably should have, aimed for, right? But with this BPR and whatever breaker block, order block here, there's no reason for me to hold past here, especially, catching this entire range, right? And coming into 10 a.m., you also see a lot of people here, sweep a liquidity, fair value gap, wait for the fair value gap to get filled, and it doesn't get filled. All right, coming into Q2 here. Well, I wish that candle would have stayed like that, because this is when I was going to say that you can trade Q4. But obviously we haven't taken out a low, a higher time frame low, but this is now a high resistance low, or you would like to see it act as one, right? Obviously, with how we reacted Thursday just as a whole, right? So in Q2, into the cycle, after, you can maybe see this as an egg cycle, but because our higher time frame cycle is A, right? We want to see this as A the best we can, and use the run up as this lower time frame. If we zoom in even closer here, and you obviously don't need to do this when you're learning it, but I'm just breaking it down to show you almost how obvious it can be, right? We have our accumulation, right? Accumulation, manipulation up. I thought that would align better on the 15-second. Or no, yeah, it does. I'm just dumb. Right. We have our accumulation, accumulating these lows into manipulation up, right? We open the cycle, manipulate above Q2 cycle, form, obviously a fake top, right? Under our order block, right? Retrace Q4, accumulate, lower time frame Q1, manipulation above the old highs into our order block, and then distribute lower Q3 into a retracement in Q4, right? So let's delete that one. Right? So we're in long here. Let's get in one con. Come in there. I wanted to get in lower, whatever. Because that would be the 15-second order block. Right? And then for this example, I'll just hold till the end of the Q3 cycle. And see, the reason why I shouldn't have done that is because you can see lower time frame, right? We accumulated, but then manipulated higher. So instead, right, we should have seen a reaction dig a little bit lower, maybe turtle soup my lows again, and then continue higher, right? It's not that big of a deal. We may have taken a loss or with the PDA that I had marked out or have marked out. We may not have taken a loss, right? I'm not gonna go in hindsight and say, oh yeah, I would have done this and that. Right? It's just for the key of seeing the overall aspect of what we got going on, right? So you can get into more here, right? Stop below the PDA, expecting, after your reversal, after your distribution, right? And this low resistance, us needing to not expand lower, but now retrace higher, right? To continue lower. Create some equal lows, soup them. React higher, and then to close, right? What we would expect to be the retracement cycle, we get that. So we should come into go up to the 1 minute time frame. Coming into Q4, which we don't want to be trading, right? So this should be our last trade, right? Of our actual, like live account. We might have some practice trades in here, right? That we'll show for example. But, for the high probability aspect of it, you want to always keep in mind that you want to be trading Q2 and Q3, right? So with this market structure, sweep the lows, raid the stops, bam, order block, react to the fair value gap. We should continue higher after accumulating, manipulating, then distributing. And just keep in mind, it's not always going to be AM. Excuse me. It's not always going to be AMDX, right? Our higher time frame cycle is that. So that's what we're basing our lower time frame cycles off of. Accumulate and close within the range. Have our Q2 open. Start to manipulate way higher, right? Come into our zone that we have marked on just the 1 minute. So we don't really have our high time frame PDAs. We're just scalping the low time frame here. Right? Have a black candle to, come into the Q2 of our lower time frame cycle. I'm not going to go down to the 15-second again. Manipulate lower. Continue to manipulate. We should see another distribution here because, right, accumulation, manipulation, distribution, it's going to retrace, and then we're going to get in short. Simply get out there, right? Accumulation into manipulation, right? Come into Q3 here, which we might just continue higher, showing our manipulation to be this one black candle at the end of the cycle. With our stop at the high, it still hasn't been broken. Looking to see if we can come below the Q2 open, which we already have. And which higher time frame cycle are we within? Haven't made it there. Within Q1 of 4-1, you definitely don't want to be trading here. So this is going to make it low probability. And we're probably going to run these highs. And what I'll do is I'm just going to close it out. And you can see just with the RR and scalping, right, we'd take these lows all the way to these highs. And, get in for a small like $170 loss. Coming in, want to see if we can stay into this range with Q4, right? Come into our Q2 open. And see if we can then come above it, make a good, aggressive pass higher, and then resume lower. So just with the cycle, just going to buy, stop at this low. Want to see us run higher. right? Would have got stopped out there. We're going to see it run higher now, right? Now we'll just flip and then get back at the order block, which we might not have time to. And it's not me flipping positions, right? I'm telling you that, oh, we're manipulating lower here to go higher, which y'all saw. We just wanted to manipulate at the end of the cycle, right? And it's just me not waiting till we, you know, ranged first, took out range low, and then manipulated higher, right? And that's just me, right? That's just me being a bad teacher and having a bad teaching moment right here, and also showing a teaching moment of where you can get better, right? And wait till the end of the manipulation cycle, right? I said stop at this low, but me, I'm just holding till the end of the cycle because I don't like I'm pretty confident of where it's gonna go. And then you see we take out the high, right? And we didn't aggressively run, way higher, but we take out the range low. Then within 2 candles, took out a range that we've created, over what 10 or 20 candles in. Alrighty, and I'm gonna cut to the notes there because honestly, it kind of got boring, right? It was like 6 minutes of just chop, and it's hard to do, back testing like that because that's not what you want to back test. You want to back test the good high volatility moves, and then going into lunchtime like that, I don't even trade around then. And like I said, it's Q4 and we were in Q1. That's not high probability, so I don't want to show you that, right? And then you go in your charts and do that because that's not what you need to be doing. So I'm just gonna leave the main part of when we were trading, the cycles, and then a little bit in the end there, right? Always keep in mind your cycles. It's not always going to be AMDX, right? It's not always that simple. You accumulate, manipulate, then distribute, right? Sometimes we have an XXMD, which that manipulation in the third cycle can throw a lot of people off, right? Um, Especially after having, multiple manipulation cycles in the second cycle, right? Keep in mind your labels, right? All of our small notes here, write them down, keep them in mind, right? Always keep in mind this right here, right? If you add it all together, it can be something serious. All right, I don't have much else to add. You can go over a couple more things. There are some things that I didn't add, right? I will add that I'm sorry that I say so much. I'm trying to stop that habit. It's so annoying, right? But I hope everybody enjoyed this episode. Hope everybody, got something out of it, something a little informative. Hope everybody has a great one. See ya.